So we're in studio with Brandon Pearson. And Brandon, I mean, I just want to jump right in. Like, take us back before real estate. What were you doing? Kind of who was Brandon before real estate?
Before actually selling real estate, I was in the residential mortgage business. I did that for a little over 7 years for several different companies. And it was simply too emotional for me. Working with like first time home buyers, there's just like a lot of stress involved, and I just didn't have the bandwidth for it emotionally, and I wanted to get into commercial real estate simply because there are no emotions involved. It's all just dollars and cents.
It's interesting you bring it up that early in the conversation, because that is one of the major distinctions between residential and commercial. Is commercial is a little bit more business based. You're dealing with professionals a lot more often, and you're really dealing with the numbers of the business transaction more so than the emotions of a personal buying a home to raise a family in.
Yeah. I mean, once in a while, you do deal with sellers that have an emotional attachment. It's been handed down through the family, that sort of thing. But it's more few and far between. And I mean, I've lost $18 million deals where a guy will just call me and say, hey, with the new information we have, it doesn't pencil, on to the next one. It's heartbreaking, but at the same time, it's nowhere near as emotional. It's not fun when you lose a deal like that, but it just doesn't take the same toll.
Yeah. So it really fits like cold-hearted people like the three of us.
Absolutely. 100%.
All right. So I mean, you make that conscious choice to go from residential to commercial. And what did that transition look like? I mean, did you just go out and get your real estate license? Did you go and like try and find a mentor? I mean, what were you doing? How were you getting into the commercial space?
I knew a guy that did commercial loans on the side. He worked out of my office, and so he had like a separate company, and he told me to call a certain firm. Because they take newer guys, but I was a little bit older than their target market, and I was 32 at the time. So
you're older than 32?
Yeah.
You wear it well. You look so
the
young.
big 3'7". And so I cold called the manager, the guy that ran the show over there, and he brought me in for an interview. Told me no. I called him the next day. He brought me in for another interview. He told me no. So this happened 3 times. And then I called him again, and he's like, listen, and I told him, if I'm not producing in a year, you can fire me. You're not going to pay me anything, right? So, I mean, you don't have anything to lose except for a desk. And he brought me in, and I closed my deal in 13 months. So I was close enough that they didn't hold me to it. Yeah. But yeah, I mean, it was certainly a tough road. 13 months without a paycheck is hard. I think for just about anybody starting out at something.
So let me ask you this, Brandon. Like, why were you that persistent? Why did you know that this was the route to go for, or did you? What led to that persistence?
I knew that commercial real estate, once you're established, it's a completely different lifestyle, and that's kind of what I was chasing. I mean, I was making good money doing residential mortgages, but the stress was just destroying me. And so, I persevered through the 13 months simply because, I had put the work in, and I wasn't going to give up until I actually pulled it off. So I was actually, I was down to like my last $2,000, and I had like $150,000 in commission fall out in the same week, and I had nothing on the horizon. So I started the process of I was going to sell my car, and I was, for living. I had a crazy idea that I was going to live in the office, and I was just going to do whatever I had to do to make it work. And yeah, so I mean, it was certainly a trying time. A lot of gut punches, gut checks, and finally I closed that first deal. It wasn't massive by any means. It was definitely the biggest check I've ever had, and I was pretty successful before. And I got the email from the closing agent saying, hey, we're all closed and funded. I put my phone down, put everything down, turned my computer off, walked downstairs, sat in my car, called my mom, and cried.
Wow. Full circle with the emotions.
Yeah.
Wow.
Yeah.
So what do you have to say? I mean, obviously that is a long stretch of time, and whether someone is in residential, commercial, or whatever, I mean, a lot of times there is a kind of a famine of money. I mean, what did you learn during that stretch about persistence and patience and hard work, and what would you share with an agent who's maybe like feeling that same thing right now?
So, I mean, truthfully, if you've put the work in and you think you can do it, nobody's going to tell you that you can't, right? So, if you just keep at it and you make the sacrifices, like some of my strongest bonds, just in my personal life, are the guys that I worked with during that time, because we all kind of went through the same thing. And I mean, it's, if you're willing to make the sacrifices, if it's worth it to you, you'll make the sacrifices. And that's the reality of it. I can't even tell you how many guys, come into the business and think that they could do it, and 5 months later, throw their hands in the air and quit. Mm-hmm. Like me and these two other guys in particular, we were eating 7-Eleven hot dogs 3 times a day. And I mean, it was crazy, 14, 15-hour days. And I knew, in my heart that it was something that I was going to be able to pull off. I've always been successful at anything I've tried, and this wasn't going to break the streak. So yeah, I mean, it's all about the sacrifice.
So you decided on commercial real estate. You obviously have the mindset of commitment and absolute dedication. At some point, you decided that mobile home parks was going to be sort of your specialty. What brought that on, and that desire to focus on that? And the follow-up question is, how important is it for people in commercial real estate to have a specific niche that they focus on?
So the funny part about that is, I'm not the most professional guy in the world, and they knew that coming when they brought me on. And I mean, I showed up with no socks with some loafers on, yeah. So basically, they just thought that we don't have a mobile home park guy, and your personality seems to kind of fit the product type.
Okay.
And so, yeah. So I
luxury high rise.
No. So it's more of a placement than a decision.
Yeah, absolutely. Yeah. And I didn't think anything of it. And I got made fun of a ton in the office by a bunch of people that I didn't know that were showing up in $3,000 suits and everything else. And I didn't care because I started getting some of these guys on the phone, and they were just nice dudes, and that went a long ways with me because they're just down to earth guys. And I mean, for the most part, obviously every product type is going to have some outliers, but. Once I started learning more about the space and kind of what was happening with it, I had a $2 million listing, and one of the largest private equity firms in the world called me. They said, "Hey, we saw this listing online. We have zero interest in this one, but we'd like to see the rest of your deals. So call us when you have some." So you start making these connections, and now I do business with some of the largest guys in the industry.
Yeah, it's interesting how networking can happen that way. Doors begin to open, small success leads to new opportunities, and then their relationships and things really do evolve in that way. And we talk about that all the time on the residential side. Sometimes you don't know the type of, the person that you're building a relationship with and the access or the resources or the referrals that they could potentially give you. So a huge lesson to be learned in any business, and certainly no exception in the commercial space.
Well, you said that a bunch of people in the office laughed and whatever, and generally you bring up the topic of mobile homes or mobile home parks and stuff, and yeah, people feel a certain way about it, and I've been a big fan for a long time, and I've said even on this podcast that I'll own mobile home parks one day soon, and you get that reaction, and so why? My question is, I want to talk a little bit about the asset class, what makes it an attractive class, and why did you look at it and start being wow, this is a really cool space to be in?
I grew up in a mobile home park when I was little. I mean, not for very long. I think we might have been there 2 or 3 years. So I kind of had a soft spot in my heart for the whole thing anyway, because I'm not scared of mobile home parks. You just live in one, right? And so that made me more comfortable with it, I suppose. And then, once you dig into them, the expense ratio is very low. It's one of the lowest in commercial real estate product types. So, you have a whole bunch of lots, that you're buying for much less than, say, an apartment unit, right? So a 12-unit apartment complex, you're going to get 40 plus mobile home lots. And so you have more pieces of the pie. So you can have a little bit more vacancy rate and still cash flow positive, which is one of the huge things. But as it stands right now, mobile home parks have the lowest vacancy rate they've ever had. countrywide. So affordable housing is a huge need. And I typically do business with owner operators as opposed to redevelopers. A lot of these guys bought these, 20, 30 years ago as a covered land play, just income producing land banking. And now it's really funny because, they own a whole bunch of mobile home parks, and cap rate compression has happened so bad that, it almost doesn't even make sense to sell it as a redevelopment anymore. Now they're owner operators by trade.
Very interesting. So you said a lot of things in there expense ratio and cap rates and all this stuff that some of our listeners don't necessarily understand. So I'm curious if could you kind of take us through the mechanics of underwriting, a mobile home park deal and what you look for and what makes a mobile home park deal good and what some of those terms mean?
So cap rate compression. So basically, it's really just the return that you're getting on a property compared to the price that you're paying. The biggest opportunity with mobile home parks is really the value add guys. I mean, they're making a killing, right? Just in terms of appreciation more than anything. So they go in, and so the best opportunities in mobile home parks are the rents are a little bit below market. So more than likely the park's a little bit dilapidated because if the rents are below market, more than likely it's mismanaged, right? So you're gonna have kind of dumpy roads. You're gonna have a housing stock that definitely needs to be refreshed. And more like 9 times out of 10, these same parks don't bill back the utilities. So one of the things about that is if the park is paying the utilities, it drastically cuts down the income of the park. And more than likely, so the tenants aren't paying the water bill. So they're taking hour-long showers, right? It's crazy the way it works. So as soon as they have to start paying their own utilities, they start taking better care of their home. And they're a little bit better with the water, that sort of thing. So once you go in there, you can get the rents up a little bit, and then with the additional cash flow, you can start fixing the roads and make the park look nicer. And it's people are more proud to live there. And then you bill back the utilities, and it skyrockets the income on the park, and with the cap rate compression, so your returns. It skyrockets the value of the park. So your cash flow goes up and the value goes up exponentially, simply because the cap rate and the private equity firms are coming in and paying these outrageous prices for them, and it just makes the entire market go up in value.
So not dissimilar from residential real estate, right? You buy a property that's a little underwhelming. You force appreciation through improvements, right? You renovate, you make it better. You then justify a higher rent, which creates more cash flow. Then you can sell it at a higher price.
Yes.
It's sort of a super simple breakdown of the same process.
Yep.
What are some of the biggest differences in dealing with the tenants of a mobile home park versus an apartment building, for example?
Not really much. The people that are living in the apartments typically have a little bit more financial resources. There is a little bit of handholding for some of these folks, simply because some of them are making like $800 or $900 a month, if that, and you've got your SSI income. So fixed incomes, you've got like government assistance, that sort of thing. There are Section 8 parks where the whole park is Section 8. It's a less sophisticated tenant financially, but they're all people, right? So it's just a matter of walking through somebody on how to really get the rent paid.
So my understanding with the Section 8, correct me if I'm wrong, is if as long as your units or your park meets the standards that they've set forth for living conditions and safety, they will place Section 8 families in that property and basically then pay rent directly to the park on their behalf. Is that sort of how that works?
Yep. Yeah. It might be more common than I know about, but I know of several smaller parks, like in Tennessee, that are Section 8.
Interesting. So in those ones, are they park-owned homes?
To be completely honest with you, I'm not sure. I know the owner. I guess I didn't necessarily ask that question. I would assume so, though.
Yeah.
And that's sort of where I was going with my first question. What is the difference between park-owned homes and when the actual tenants or the property owners own the mobile homes themselves and just lease the space?
Yeah, a big question I get all the time about this is like, what do you actually own?
Mm-hmm. Yeah, so I mean, you really own the dirt and the infrastructure, and then sometimes the city owns the roads, which is ideal, obviously.
So they maintain them.
Yeah. Exactly. So the difference, so the ideal park to buy is all tenant-owned homes, simply because you don't have that liability. If you have a bunch of park-owned homes, your income is significantly higher. Some companies operate that way, and they do a really great job at it. But it's really just a net operating income. It's that. I mean, all you're trying to do is puff that up, which it's just way more involved. So you have to have like a crew on site that's able to turn these homes in a quick way,
right,
for cheap. That way it makes sense.
You have to be able to replace the homes, repair the homes, improve the homes as needed to fit your tenants' demands,
right,
and make them maximize the rent. Whereas if they own their own mobile home, you're just providing the space and access to the utilities, and they're managing the rest of their home inside and out.
Yeah. And I mean, it goes right back to like if you were going to rent somebody a single family home, water heater blows up, that's on you.
Right.
So it's just infinitely less liability.
So are you finding with the majority of like the buyers right now that do they like want to offload all those homes then? Or is it kind of split down the middle, 50-50 between operators that like to own them and not?
It's a very small percentage of owners that prefer park-owned homes, even though the income is significantly higher. It's just a lot more headaches.
Yep.
But what was the first question you just asked?
Good question. I can't even remember the first part because I think you answered my question.
Okay.
No.
Okay.
So
I have a different question.
It's not often that our guest, Joe, and I are all at a standstill.
It's not often that happens.
In 100 episodes or whatever we have. So what was because I cut you off. He answered my question. And I'll be honest, I was at a concert late last night. And so my short-term memory right now,
That's okay. We'll give you some grace. You mentioned infrastructure a second ago. What other type of responsibilities might you have as a park owner as far as employment of a manager, responsibility to maintain other features of the park? What other responsibilities do I need to be considering if I'm looking at mobile homes?
So, I mean, really, you get like a park manager, as long as it's a smaller park, right? It's probably what we're talking about.
And how do you define a smaller park?
I would say like 50 lots or less.
50 or less, okay.
Yeah. And you're probably just going to give somebody free lot rent to kind of oversee the park, help collect rents, enforce rules and regulations, that sort of thing. Like the clutter in the yards.
Sure.
Making sure that somebody hasn't built a carport, which happens all the time. So, I mean, that's what kind of the manager's responsibility. And then obviously if there's like a water main break or something like that, they get on the horn because that's the biggest liability. That's the biggest problem. So that's maintaining the infrastructure and then just making sure that nothing crazy is happening.
Right. So we have things like landscaping, snow removal, all those normal things, as long as it's not city roads again.
Yeah. I mean, the snow removal is big in certain states, obviously, where it snows, 12 inches in a day,
right?
That sort of thing. So, you've got your snow removal, landscaping, just to make sure that there's not like overgrown weeds and things like that.
Yeah.
But it's honestly extra simple.
No, when you get to 50 units or more, then what are we starting to look at as far as management options?
Then you're actually paying like a salary. I know a lot of groups that I work with, they'll pay a salary plus benefits like 401k, dental, vision, sort of thing. So it incentivizes the park manager to do, go above and beyond, and stick around for a long time. And most of the time when these larger players, they come and they buy these parks, 99 times out of 100, they want to keep the management because they know, all the skeletons in the closet in the park.
Right. That makes sense.
So I want to bring it back to your story a little bit because, you've only been doing this for like 5 years and you're one of the top mobile home brokers in the country and we're fortunate to be in business with you. So there's that. Like what do you attribute your success to?
I mean, Truthfully, the sacrifice more than anything, because I think I probably got into it maybe a little bit after the most ideal time, but it was still right around that time. So I started making the connections, that sort of thing, and just putting the work in more than anything. I mean, it was just such a grind. I can't stress that enough. I mean, it was like the most trying time of my life for sure. I wasn't making any money. I was working a second job just to pay my rent. I had this fancy car that I definitely couldn't afford at the time. And so it was, I mean, I would say it's probably this exact same for residential real estate. If it was just putting the work in and establishing myself no matter what it took. And that's what I've lived by ever since.
Well, and it eventually led to a very significant deal, and I don't know how much you can share about it or whatever, but I mean, you hold the record, is my understanding, in Wyoming. Can you bring us into that deal a little bit, kind of how it came to be, what it looked like, and how you ended up pulling that off?
So we do own a few different records in Wyoming. So I would argue that we also own the lowest cap rate mobile home park deal. And yeah, so the largest mobile home park transaction in Wyoming state history. And so this deal was brought to me by another broker, actually. So they had a great connection with developers. And the seller was some billionaire that was local, and he basically built this massive park to house most of his workforce. And over the years, he just thought, well, honestly, I kind of like this little project. I'm going to hold on to it for a while. And it was being marketed a little bit off market, but I mean, it was being shopped by a few different brokers. Just because, I mean, I think everybody got the feeling that they were probably going to sell soon, definitely due to cap rate compression. And so I just brought some real players in the industry. They loved the deal. They loved the area. And I put them on the phone with the actual seller. And these guys, I definitely have some clients that I would put on the phone with any seller in the world ever. I've never put them on the phone with somebody and they haven't gotten the deal. They're just really cool guys. And yeah, sure enough, they came through, and the seller really liked them, their temperament, the way they talked to them. And they said, yeah, let's go ahead and do business. So I guess the biggest benefit to it was, and I've sold these guys a bunch of parks since then, just because, I mean, they're like my favorite guys in the industry. And it was a situation where we put the deal under contract, and I didn't hear anything about it for, I want to say, like 75 days. And they called me on the day of closing, and they were like, hey, great job on this. You really worked your tail off. And I couldn't believe it myself. And I was like, yeah, no, absolutely. You're welcome.
That's awesome. So you've mentioned a couple of times sort of key players in this space, and I imagine, because how lucrative it can be, that there are some pretty powerful people that take this on. How does an average person like myself get into buying mobile homes, which is sort of a segue into talking about some of the financing you've seen around the acquisition of these properties? So
the beauty of it, I mean, a few years ago, the only real debt you could put on these things for the park itself is, it was like local credit unions or like very local banks. So I mean, the bank would pretty much have to be in the same city or town that you're trying to buy it. And now with all of the institutional money that's dumping into the space right now, and how aggressive people are buying these, I think banks are taking a much closer look at it as a more desirable product type. And so you're getting Fannie Mae and Freddie debt on these, and so they've stepped into the industry. And I mean, I've seen 2.5% interest rates on some of these deals. They're putting 40% down, but you've got a 2.5% interest rate for 10 years with a 25-year amortization. So it's some of the most favorable debt I've ever heard of.
Sure.
So I mean, they're doing a great job, but they have minimum loan sizes, right? So I mean, we actually did a CMBS loan, which is so big boy loan, on a $3 million park. It was a $2.6 million loan. And I mean, I couldn't believe it, but they did it. We got it in and out in 27 days. So, once you start putting CMBS debt on single parks, that's when you know that it's kind of time for these banks to start shining, right? Because they can offer these awesome terms because the debt service coverage ratio is so phenomenal.
So, okay. So what's next for you? Like, as you think about like your career and what you're doing, taking down more and more parks, where do you see your business going next?
I mean, I'm really looking to expand aggressively. What I'd really like to build in the short term, I'd like to recruit some other guys that are producing, kind of like the guys on my team now and gal. And I want to have like a nationwide presence. So right now we work in 7 or 8 states. And I'd really like to get some people on the West Coast, on the East Coast, and just kind of have a centralized like deal flow. That way, because these guys don't necessarily. So if you own parks in Texas, you don't just want to own parks in Texas, especially if you have 5 or 6 of them. You know that the opportunity is out there in other states, right? And you can buy them at a lower price per lot. Say if you go to like Louisiana, for instance, you're buying these things at like $30,000 per lot. Whereas in Colorado, I've sold deals for over $100,000 per lot.
Wow.
And same quality parks too. It's crazy. It all just has to do with the lot rent and the demand, right? But so you've got, you'll call a guy in Texas and he's like, I don't really want to buy in Texas anymore because it's kind of pricing me out of the market, but I would definitely buy something in Louisiana. Well, we need a guy in Louisiana that's producing deals, and so my vision really is having just a deal page in our database where, you're on the phone with the guy in Texas and you're like, hold on. You hop over the deal page. Hey, we've got 3 deals in Louisiana right now. You want to take a look at them. Mm-hmm. So I think that with more coverage throughout the country, we can definitely expand our production from $100+ million a year to $1 billion plus pretty easily.
Walk us through an average or typical day in the life of a commercial home park commercial broker. What does that look like? How different is it from residential sales? How different is it from what maybe people are expecting?
I think the main differences between commercial, especially in my product type, in apartments, it's quite a bit different, like office. But for mobile home parks in particular, I've sold a chunk of these things and I've only met probably 3 of the sellers. I don't meet I've done deals with a bunch of different guys too. And I think I've only met 2 of my buyers. So it's completely different where, you're definitely driving parks, when you have the opportunity. You do have to make a time commitment to that. But other than that, you're not going to inspections, you're not going to property, looks or anything like that. Right. The clients are all doing that on their own.
So where are you, if you're not meeting them in person, where are you finding the clients in the first place?
So we're terrorizing people on the phone.
Okay. Terrorizing.
Yes.
I love the way you put
absolutely. So basically it's just a ridiculous amount of cold calls.
Okay.
We'll make anywhere between 200 to 400 calls each every single week. So we have a database. I've got somebody that scrubs it, gets us somewhat reliable information, and then we're just calling every single number in the database, trying to get a hold of whoever owns the park.
You're looking for motivated sellers.
Yep.
Okay.
Absolutely.
Sense. Got it.
And I love the way that you talk about the phone because, I don't care if you're residential or commercial, like the phone is still the highest converting like activity. And if we can get more people not afraid of the phone, they're all going to be better for it. And so, man, I could stay here and talk all day. Are there any like last minute questions from you before I transition
I wanted to just get back into the financing really quickly.
All right.
Because this is the part of that. So what I heard you say earlier was now with capital in the space and Fannie and Freddie being involved, I can find, let's say I have a $5 million park. Mm-hmm. I can finance, let's say, depending on some of those details, 60, 70, 80% of that park through a conventional type loan. So I need to go then raise $1 million, $1.5 million, maybe $2 million in private capital, leverage the rest, and then acquire a $5 million property. So if I don't have $1 million or $2 million, I know that in the residential space, I can, or even the commercial space, I can just go find somebody with deeper pockets than I am, say, hey, look, you've got the cash, I've got the time, I'll put in the sweat equity, I'll acquire this thing, I'll be the manager, I'll manage the property manager, I'll take care of everything. And sort of, is it the same? Do you see that in mobile home space as well?
Yeah, I mean, a lot of people get into it a lot of different ways. I know some of the most successful guys in the industry, the private portfolios, one in particular, started with owning a mobile home.
Okay, he climbed the ladder.
Lived in a park, bought a mobile home as a rental, and over, a short period of time ended up owning 4 or 5 of these things. And the park owner just approached him and said, hey, listen, you own a third of the park. You want to just buy it? I'll seller finance it to you.
Great option.
Yeah. And so, I mean, seller financing is probably the most popular when it comes to mom and pops, like with small parks, especially with some of the smaller buyers that might not have a massive down payment like that, or family and friends with the money. But yeah, and now they have one of the largest portfolios in the country.
Is there anything about mobile homes that make the seller of mobile home parks more likely to be willing to finance it?
Because you've got a lot of mom and pops that have owned these things for a long, long time. So 90% of the mobile home parks in the country are owned by mom and pops. And so they have sort of an emotional connection to the park itself, and they probably know some of the tenants. And they also want to keep the income, right?
Sure.
So you give them a seller financed option, and they might be making 60% of what they were before, but it's still, that's the retirement income.
Right. And with interest over time, they end up earning a lot more than the actual purchase price.
Yeah, it's very attractive. It doesn't happen as much with the larger parks.
Sure.
But in the smaller parks, 100%. If you've got like a 10 or 15 lot park in a not so desirable area, seller financing is probably the only way you're going to get it financed.
My key takeaway is that I just have to convince the family to move into a mobile
right.
home. I'll just start buying them.
Good luck with that.
Well, Brandon, thank you so much for your time, man. And we're going to transition to the last segment of our show, which is called 3, 2, 1 Action. It's the same 3 questions we ask every single guest. You're in the hot seat. You ready?
Yeah.
All right.
Question number 1. Who's the one most influential person on your business and why?
I would say probably a guy named Barry Higgins. That's who my mentor was when I first got into commercial real estate. He's the only guy in commercial real estate that I've trusted and worked with consistently that hasn't screwed me. Truthfully. But yeah, I mean, I honestly owe, almost all of my success, to him. And, I just talked to him yesterday. I mean, he's a park owner, but he's also a broker, and he kind of taught me the ropes.
That's super cool. Question number 2 is, what is the most influential book on your business?
Truthfully, Frank and Dave's boot camp book. It's the holy grail of mobile home park knowledge. I went to their boot camp. It's like Mobile Home Park University, and they educate investors or brokers or whatever getting into the industry or that's curious about the industry. And they hand out, I think it's like 180 pages, and it tells you the ins and outs, absolutely everything that you want to know, need to know. And I can teach anybody how to sell these by giving them the book for the weekend.
That's awesome. Third and final question, Brandon. As you know, this is the All In Podcast where we encourage our listeners to take what they've heard today and go put it into action. So what's the one action item they can take today if they're interested in getting more involved in mobile home parks?
Call me.
Okay.
Yes.
I should have seen that coming.
I love it. Short, sweet, to the point. So with that in mind, our listeners are going to want to connect with you, find more of your content. Where can they look you up and connect with you?
So you can call me at 720-419-4319. Call me, text me, whatever you want to do. Or you can find me on Instagram at Trailer Park Brandon.
Love it.
Love it.
Awesome. Brandon, thank you so much for, 1, being in business with us at KW Arizona, 2, spending some time with us, educating us and teaching you. Huge road to success still in front of you. This has been a lot of fun. And I just appreciate your time, man.
I appreciate you guys having me. Thank you.
Guys, this has been another episode of the All In Podcast. As always, go out and play all in.
Hey guys, thanks for listening to this episode of the All In Podcast. We want to invite you to find all of today's resources from our show page at aipodcast.co. We also ask that you take just 1 minute to leave us a review on iTunes or wherever you get your podcast. This is how we grow and how we're able to bring you the best content each and every week. Now go play all in.
Time.
Wrap.
There we go.
Right on the money.
11:54.
We're good.
There you go.
sick.
That was good stuff.
It was
right?
fun.